The stock market is sitting at critical resistance, and we have FOMC on Wednesday. So first up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. All right. So the first thing I want you to understand is you need to be very cautious right here because we are sitting at critical resistance on SPY. Remember, I always say never get bullish at resistance and never get bearish at support. Well, we are currently at critical resistance, so there is no reason to be bullish until we see if resistance can break. You can already tell looking at this daily chart, this is a rejection candle. And no, it is not getting rejected on extremely high volume, but it could be very soon that we start seeing sellers show up. Remember, I told you there was a good chance we were going to get a low volume melt up, and that is exactly what we are currently seeing. But the problem with low volume melt ups is that they can quickly reverse once you start to see high volume selling, and the low volume melt up only occurs in the absence of selling. So you need to understand at critical resistance, you should not be taking on too much long risk. In other words, if you're still in a lot of long positions and you're short on cash, or you're still sitting in leveraged option positions like calls, you are not managing risk correctly. This is the time to lock profits and wait until we get confirmation that resistance breaks. So this level is critical for two reasons. If we get rejected from this level, we're going to be looking for a very high volume rejection that could take us back down towards 411. And if we get a breakthrough this resistance, we're going to get high volume buying as we get a short squeeze up to fill the gap at 421. Now, we don't know which one is going to play out. That's why we let the price action do all the talking. If we start to get that breakout above 417, we are going to start squeezing out the shorts. But if we start getting high volume selling, the shorts are going to take over and we're likely going to push down to these lower support levels. Now, keep in mind, as long as these lower support levels continue to hold up, we are still making higher lows and higher highs, and we still have a bull trend. So for that reason, we are very short-sighted right on one level only, and that is going to be the level at SPY 417. We are either above or below that level, and while we are below that level, there is no reason to be bullish. We need the confirmation of the breakout before getting bullish in this trend. Never get bullish at resistance. Continue to hammer that home into your head. You don't want to be buying here at resistance. Jumping over to the NASDAQ 100 triple Qs, we were down 0.11% today, and the triple Qs is really just closing on an indecision candle right here above the gap close at 322. And we still do have the double bottom price target up there at 327. Now, the interesting part about the triple Qs is that we are not currently sitting at any critical resistance, even though we are on SPY. That could hint that the tech sector is strong enough to push SPY above resistance as the triple Qs are approaching 327. However, you instantly need to get more risk off if the triple Qs cannot hold this breakout between 319 and 321. If we don't see any buyers in this breakout, this was likely just a false breakout short squeeze, which could be a bull trap before going to lower prices. And we still do have that gap to fill down there at 308, and we've already filled the gap up here at 322. Now, like I always say with gap fills, we know that gap is going to get filled, but we don't know if it's going to get filled this week, next week, or next year. So we don't want to obsess about that gap there, but we want to be aware of it. If we start to see a high volume rejection, that would be a very valid downside target. So on the triple Qs, manage your risk right here, right around the breakout, which is roughly going to be right around 320. And if we continue to hold the breakout and we continue to see buyers, we are likely going to 327. On the Dow Jones, we were down 0.2% today, and the Dow Jones is also at very critical resistance, which is going to be this zone right between 342 and 343, which is the highs from back in January and February. If we break those highs, we're likely going to 346 and then 350. But there is no reason to get bullish at critical resistance, just like I talked about with SPY. We were also outside the upper Bollinger Band, so it's very easy for sellers to step in here because they have low risk, and the bulls are getting at overextended conditions outside that upper Bollinger Band. You could stay bullish as long as we can hold this breakout zone right around 337, but you need to manage your risk very well, especially sitting here at critical resistance. On the Russell 2000 IWM ETF, we were up 0.06% today, but again, another warning sign is intraday we hit the resistance trend line just below 178, and we instantly found sellers and closed back down below the 20 daily moving average. That is not a bullish candle, and that is not bullish price action, and we still have the downtrend of lower highs and lower lows. So the small caps are telling us to be cautious. And you're only getting bullish in the small caps if we get that clean break above 178, and then we're looking for the gap close at 181. Manage your risk to the downside at support right around 170. On the ARKK ETF, we were down 0.5% today, and we still have the bear trend, and we still have the valid double triple top, which could take us down to close the gap below 32 while we're trading below support at 37. On the VIX, we were up 1.9% today, and the VIX is still closing at very low levels, sitting down here right around 16. But keep in mind, anytime the VIX is low, there's always a possibility we see a little bit of spike in volatility, especially because we have FOMC this week. Overall, we are out of the bear market while the VIX is below 20, but that doesn't mean we can't still see volatility in the VIX spiking in between this level at 16 and this resistance at 20. On Bitcoin, we're currently down about 4.5%, and Bitcoin is rejecting at that lower high potential that I talked about last week, which was this level right around 29,000. When you get a high volume bearish candle like this from a lower high rejection, you instantly need to assume it's possible it's going to lead to the next lower low, which is going to be that breakdown below 27,000. So looking at Bitcoin, I see no reason to be bullish currently because we're getting rejected from a lower high rejection on a high volume selling candle, and we're very close to critical support. So if that support breaks, we're looking for the floodgates to open back down towards 25,000. On Google stock, we were down 0.13% today, and Google is still looking bullish in this bull trend as long as it's above the rising 20 daily moving average right around 105 to 106. If we break that support, we're likely coming back down towards 100 to 102, so manage your risk up here right around 106. If we continue higher in this bull trend, our next upside target is going to be that gap close right around 110. On Amazon stock, we were down 3.22% today as Amazon continues to sell off after their earnings report, and today we did lose some critical support at the support trend line and rising 20 daily moving average right around 104. However, we're still sitting at our other critical support at 102 and above the rising 50 EMA right around 101. So in order to get bearish, we will need to lose all of this support, and then we're likely coming down towards 94 and then 90. Do not get bearish until that support fails, but you really need to be cautious as a bull right now because we did lose support at 104 and we could be losing the support trend line. That means Amazon is going to be very choppy because we have no clear trend in any direction, and we only really spent that one day above the 200 daily moving average, so keep in mind below the 200 daily moving average, the bears are in control. On Microsoft stock, we were down 0.55% today, and Microsoft is really just too far outside that upper Bollinger Band and way too far extended, and it's really struggling to close that gap, which is the price target at 310 while it's in this overextended condition. This could easily invite high volume selling because the bears have low risk when it's this far overextended, but keep in mind this is still in a very strong bull trend, but that doesn't mean we don't need to put in another higher low, which could be all the way down here between 290 and 293. That's the retest of the breakout after earnings, so I won't be surprised to see us come back to that level eventually. To the upside, if we continue to overextend, we're looking for that gap close at the price target, and then we're likely going to be due for that cool down. On Nvidia stock, we're up 4.18% today, and Nvidia is just continuing to blast the bears that are trying to call a top because we were in this trading range between 262 and 280, and today we broke out to the bull direction. This is a very miserable time if you're one of those people that continue to try to short this stock because you think it's overvalued. You're ignoring what the chart and the price action are saying, and right now that's saying we're going higher. My next upside target on this breakout is still up there between 296 and 298, and there's a very good chance if we go that high, we go all the way to the nice round number of 300, but the price target will be there at 298. You can see this was on higher volume, and we're likely going to squeeze out the shorts, and you need to be bullish as long as we're above the breakout of the neckline at 280. On Tesla stock, we were down 1.5% today as Tesla is getting rejected from that lower high, and I said that was a good possibility that Tesla will put in a lower high before closing the gap at 146. So for that reason, if you are bullish on Tesla, you need to manage your risk right here at 160, because if we start closing below 160, I am looking for that target down here at 146. Yes, we can go lower, and yes, we have more gaps to the downside, but right now I'm more focused on 146. Or the break of this high up here at 167. If we break 167, then we're actually looking a lot more bullish, but we still have the resistance trend line and strong resistance at 173 and the gap close at 177. On Apple stock, we were down 0.05% today, and Apple is very close to reaching our price target at the gap fill at 171. And if you've been following me, that is what we've been looking for quite some time, and we are nearly there. So at this point in Apple, you just need to be cautious because the upside is extremely limited. and I don't want you getting overly greedy for a little bit of upside potential when we're practically already there. So manage your risk smartly, and on Apple that is going to mean you need to manage your risk right here, right around the breakout at 168, because any level below that is just too much risk to take on when we're this close to the price target. On the financial sector, we were down 0.27% today, and we're getting rejected from resistance, and we're still below the 200 daily moving average, and we still have gaps to fill to the downside, so be cautious if we start to see high volume selling from resistance. On the industrials, we're up 0.54% today with price action still back above all the moving averages. We just need to get that breakout of the higher high above 101.5. The healthcare sector was up 0.52% today, getting that bounce off of the 200 daily moving average, back in the bull trend and back over resistance at 174. The energy sector was down 1.13% today, still holding above the rising 200 daily moving average, so you can stay bullish as long as we hold support at 83. So jumping back over to the S&P 500, I tell you right here is where you should be cautious because you just have no reason to be bullish at resistance. Also, if you're shorting at resistance, you still need to be cautious as well, because if we break through resistance, we're going to see a very powerful short squeeze to higher prices. So you need to be cautious as bears and bulls alike at this very critical juncture in price at 417. Below it favors the bears and above it favors the bulls, and we are currently seeing a rejection candle below it. So right now you need to respect the fact that we're at critical resistance, and if the bears start to show up in a big way like we haven't seen, we are still going to lower prices. Even if we put in the higher low and continue the bull trend, you still need to be cautious of selling at this level. If you want to come trade with other price action traders and get access to all of my intraday updates and analysis, come join us over at the Stocks Channel Trading Discord community. I also have my own trade alert service called Bank Trade Alerts that will send you all of your buy and sell alerts directly via email and text message, and only trades the ETFs TQQQ and SQQQ. You can find out how to join the Stocks Channel Discord or Bank Trade Alerts by clicking on the links in the description of this video. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.